everybody. Welcome to today's fundamentals. Hello, Peter. So I understand that the USD was dropping yesterday.
Yes, we had a considerable drop of the US dollar. It was across the board, and practically we may say that the release of the US CPI rates for November, which decelerated substantially, actually more than expected, tended to intensify US dollar's drop. I would note that also the release solidified the market's expectations that the Fed will be easing its rate hiking path. And making a start with today's interest rate decision, the bank is now expected to hike rates by 50 basis points. However, the interesting part is that the market increased its expectations for the lowering of the interest rate hike as such. I would note though that the whole picture may be reversed depending on the Fed's interest rate decision later today.
And what about US stock markets?
US stock markets rallied. We had all three major US indexes, that was the Dow Jones, Nasdaq, and the S&P 500, were in the greens, despite some signs that they tended to pair the gains they made from the release of the US CPI rates. Overall, they managed to remain at rather high levels. And I would dare to say that there may be some bullish tendencies which are underlying US stock markets right now.
And gold's price?
Gold's price also tended to be on the rise, maybe less than expected, but still. And I would also note that the release of the US CPI rates had also as a byproduct an increased demand on US treasuries. Thus, practically the yields of US treasuries dropped, and I think that tended to polish the attractiveness of gold even further.
So the market attention is now shifting to the Fed's interest rate decision today.
Yep. Practically all of the attention is on the Fed's interest rate decision. The bank, as we have mentioned, is expected to hike rates by 50 basis points. Fed funds futures imply a probability of around 97% for such a scenario to materialize. But it's not only about the rate hike size as such. We are also getting the new dot plot. And at the new dot plot, we may see Fed policymakers actually signaling that the final interest rate may be higher than the September dot plot showed. And at this point, we may see the final rate actually approaching 6%. That would be a possibility. It's nothing certain, but it's quite possible. And at the same time, though, I would also expect Fed policymakers to show that they expect high rates to reign over the US economy for a longer period. Now, such an element would practically be hawkish for the US dollar. Also, we have to note that the tone of the accompanying statement will be very important. We expect that the Fed's going to maintain a rather hawkish tone despite the slowdown of the CPI rates, and actually stress its role in curbing inflationary pressures, and that the CPI rate has to get back to the target of 2%. I would also expect such a tone by Fed Chairman Jerome Powell in his press conference half an hour later. Now, overall, during the event and during the press conference, we may see increased volatility for USD pairs, major pairs. So caution is advised while trading. And I would also highlight the possible ripple effects of the decision, as we may see also US stock markets experiencing high volatility. Gold's price could also be affected. And to a lesser degree, we may also see oil's price getting some effect.
And what else is on the calendar for today?
Well, we already had UK CPI rates. Now, the UK CPI rates slowed down more than expected. And now we have to see at the release, also in conjunction with Monday's GDP rate for October, which accelerated more than expected, as did also the manufacturing output, both for October. And yesterday we also had the employment data, which sent out some mixed signals, given that the employment change figure got out of the negatives and reached 27K. Now the deceleration of the UK CPI rates, the headline CPI rate on a year-on-year level, practically may be easing the pressure on BOE regarding its interest rate decision tomorrow, and may allow practically a shift in the balance of power within the bank, given that we had already two policymakers which descended the rate hike size in the last meeting. They favored lower rate hikes. So it's the first sign that inflationary pressures may have peaked in the UK. And I think that's going to be shifting not the rate hike size as such, but could shift the tone about the future rate hikes. I would also note that we had from Sweden the CPI rates for November as well. The acceleration was as expected, and that may be adding pressure on Riksbank to hike rates at a faster pace. And that could have an adverse effect also on the Swedish property market. Other than that, right now we're getting Eurozone's industrial output. It's expected to drop into the negatives, which definitely it's not a good sign for the euro, as given that we have, especially in Germany, a more manufacturing-oriented economy. Now, should industrial production actually have dropped to the negatives, showing a contraction, we may see the euro weakening somewhat ahead of ECB's interest rate decision tomorrow. I would also be noting in the American session from Canada the manufacturing sales growth rate. And oil traders may be keeping an eye out also for EIA's crude oil inventories figure. It's expected to show another considerable drawdown. Should that be the case, that would imply that the US oil market remains rather tight and may provide some slight support for oil prices. Other than that, I would be noting during tomorrow's Asian session, we are getting Australia's employment data. The employment change figure is expected to rise, and that employment rate is expected to remain the same or even tick down a little bit. Now, should that be the case, we may see the Aussie getting some support, as that would imply practically that despite all the tightening up until now by RBA, the employment market in Australia seems to remain rather tight, and its ability to create new jobs remains intact. Later on, we get some worrying news as we get China's industrial output growth rate, which is expected to contract deeper into the negatives. And, it's expected to slow down. Yep. While the retail sales of China is expected to contract deeper into the negatives. So, practically that would imply that the Chinese economy has suffered a double hit in November, both on the production side of the economy as well as on the demand side of the economy. And that could be a negative for the Aussie as well, as that would imply practically that there would be less exports of raw materials to China in the coming months as well. That should be it.
Great. Any final comments?
Definitely the highlight is going to be the Fed's interest rate decision. For any traders which may want to avoid the Fed and the volatility which is to be created, I would also note oil. We have a very interesting oil market. We have developments on the supply side as well as on the demand side. So I think it's going to be an interesting trading instrument to watch out for.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. My name is Peter Yosef. I'm the senior analyst at IronFX. In front of your screens, you have, as usual, the US dollar index 4-hour chart. Mind you that all charts to be presented are to be of the same time frame, the 4-hour time frame, unless otherwise stated. Now, to make a start with it, we highlight the drop of the US dollar index, which characterized the drop of the USD. It was characteristic that it has dropped, breaking the 104.05 support line. And I would be also noting that even the correction higher of the market tested that level as a resistance line and it held. So practically we have to change this into resistance line given that the price action now is decisively lower, and go hunting for a new support line. Okay, let's widen this. This is a nice throw, and this is a nice throw. I think I'm going with this one. And the main reason I'm choosing this one is because we have a hit here and some support here. So it seems to be pretty valid. Let's go further back. If we lower this, nope. Still holds. Okay. Let's see what it is. It's in green, as we're talking about the new support line. The 99.80 support level. Once again. Let's readjust and make the necessary corrections also on the labels. We're going to be changing a little bit the presentation today, the course of the presentation. We're going to go through a couple of major currency pairs, and then we're going to go through US stock markets, gold, oil, and should we have time, we're going to go through some FX pairs more. Now, making a start with the R3, which is now being placed at 107.15. Second resistance line now being placed at 105.55. First support line, my bad, sorry. First resistance line being placed at 105.04. Sorry, 104.05. First support line at 102.50. And the final, and the second support line at 101.30. The final support line being placed at 99.80. Plugging everything in. That's it. Two elements. A, we see that the price action, actually three elements. The first would be that the price action has dropped, has broken the 104.05 support line, now turned to resistance. The price action, as mentioned, has already tested that level as a resistance line as well and has held. Hence, the R1 seems to be pretty valid. The second element is that the price action of the RSI indicator has dropped and reached the reading of 30. It's actually at 30 right now. which on the one hand underscores the superiority of the bears. On the flip side, may imply that the index is reaching oversold levels and may be about to correct higher, which brings us to the third element, which are the Bollinger Bands. On the one hand, we have a widening of the Bollinger Bands reflecting the increased volatility. Yet, I would note that the price action has hit the lower Bollinger Band, which may also slow down the bears for now. Overall, though, the index's direction is expected to be heavily influenced, if not decided, by the Fed's interest rate decision later today. Should the bears maintain control, which under any other normal trading circumstances seem to be favored by the signals sent, I would expect the price action to drop and drop as low as to reach the 102.50 support line. However, let's have a look where the S1 actually rests on which shows and how far back. So the S1 used to be a resistance line and has now been turned into support line. And latest occurrence was on the 6th of August, but it also worked as a support line here. So it's pretty well tested. That was in beginning of May. Okay, seems to be pretty valid. Anyway, we should note that the price action practically has not reached such levels since late June. Let's have a look. Yep, since late June. We are practically at an almost 6-month low, which may also be causing some cold feet for the bears. Overall, though, we tend to maintain a bearish outlook for the index. However, on the flip side, we have to note here that, once again, the Fed's interest rate decision later today is to be the deciding factor for the index's direction over the next 24 hours. Let's have a look at Euro USD. Euro USD, which, as expected, has risen, has broken the 1.0605. Hence, we switch the role of the R1 into a support line. And let's go hunting for a new resistance level. Okay, we have one level here, was broken so often. Second level here, it even gets a double click here. 1, 2, aimed for here, tested here, tested to the downside here, and there's a third one here, where we have a clear peak here. See how the price action was able to reverse the upward motion into a nice downward slope. I think I'm going with the last one. But on the other hand, this one has more touches. So seems to be well tested. I'm keeping this one. And that would be the, in red, 1.1130. Let's readjust. Let's correct the labels. Okay, let's start with the S3, which is now being placed at 1.0295. S2 at 1.0460, the S1 at 1.0605, the R1 at 1.0785, the R2 at 1.0935, and the R3 at 1.1130. Once again, we see how the price action has risen, has broken the upper boundary of its past sideways movement, namely the 1.0605 resistance line now turned to support. I also note the RSI indicator, which remains rather high. It's currently at, let's have a look, at 65.5, while the price action is flirting with the upper Bollinger Band. Once again, the Bollinger Bands have widened, reflecting the higher volatility. We tend to maintain a bullish outlook, yet I would also be noting that the Fed's interest rate decision could reverse the picture at any given moment, as it can also practically enhance the bearishness for the US dollar and cause Euro USD to rise further. Now, after the Fed's interest rate decision, the next big test for the Euro is expected to be ECB's interest rate decision tomorrow. But for the time being, let's focus first on the Fed, see how that goes, and then some. Nevertheless, should the bulls take over, we may see the price action rising, reaching for the R1, maybe even breaching it, and open the way for the R2 1.0935. There were some releases in the past few minutes. Practically, we had Eurozone's industrial output growth rate, which dropped into the negatives by more than what was expected. It was expected to drop at minus 1.5% month on month. It dropped at minus 2%. However, I think the market reaction was low. And let's have a look. Drilling to the minute chart. Let's find the minute at 12 o'clock. Minimal reaction, nothing. Yet it seems to have stabilized Euro USD's ascent in the minute chart. Okay, but nothing much. Back to the 4-hour chart, readjusting. Now we covered the possibility of a bullish scenario. Give me a sec. Here we are. Should the pair stabilize though, which may sound improbable, but it's still a possibility, we may see it maintaining a course just above the 1.0605, and I'm telling that because the level was already tested as a support line and held its ground. On the flip side, should the bears take over, say for example, if the Fed's interest rate decision is more tilted to the hawkish side and practically tends to excite USD traders, we may see Euro USD dropping, breaking the S1 1.0605, aiming if not even breaching the S2 1.0460. Let's have a look now at cable. Once again, a similar picture where the pair rises, breaks above the first resistance line, corrects lower, yet seems to have bullish tendencies once again. But all that's in the frame of a stabilization of the pair, yet at higher levels. Definitely the first move we have to do is to reverse the role of the first resistance line as it has been broken into a support line. Let's go hunting now for new resistance lines. I would be noting this peak here. It's interesting because practically on two accounts. The first is definitely a nice peak which was able to reverse the upward motion of the pair into a downward motion. On the other hand, we have to note here that it was tested to the upside, but it was also tested to the downside and was not broken by a significant amount, so it seems to be holding. I would be keeping this as the resistance line, the R3 in red, 1.3290. And let's correct also the labels. The S3 now is being placed at 1.19. The S2 at 1.2125. My bad. Let's correct that. The S1 at 1.2345, which used to be a resistance line but now has turned into a support line, given that the price action has moved decisively above it and has even tested it as a support line. First resistance line being placed at 1.2660. Second resistance line, being placed at 1.2985. And final resistance line being placed at 1.3290. We have to note here that the release of the US UK CPI rates earlier today seemed to provide little volatility. Yet, let's have a look. We're drilling back to the 1-minute chart here, releasing it and widening. Let's track the minute of the release as such and how the market reacted to the news on cable. And it's 11, 10, 10, 9:53, 9:17, 9:05. This was it. We saw that the pair dropped practically the minute before the release and the minute of the release. In total by 23 pips. Not much of a market reaction, given that the pair regained any losses made very quickly, and you can see that the upward movement in the minute chart practically reaffirmed the bullish tendencies here. Okay, back to the forward chart, adjusting. Now the outlook is interestingly bullish. Let me correct this a little bit, lower it just a bit, so we have better touches here, here, and starting point here. We're missing this one, but still. So we tend to maintain a bullish outlook as long as the price action remains above the upward trend line. On the flip side, once again, the main mover for cable is expected to be the Fed's interest rate decision later today, while the pound as such is going to be severely tested by BOE's interest rate decision tomorrow. For the time being, though, once again, and as long as the price action remains above the upward trend line, we tend to maintain a bullish outlook. And should the bulls maintain control, we may see the price action starting to aim, if not even breach, the 1.2660. On the flip side, a possible stabilization could be made just above the S1, given that the S1 was tested during today's European session and held its ground. On the other hand, should the bears take over, so for example, if the US dollar strengthens, we may see the price action dropping, breaking this one, breaking definitely the upward trend line, and aim, if not breach the 1.2125. For a bearish outlook, I would require a lower true than this one. Hence, I would expect the price action to drop below the 1.2125. That would make me feel more certain, more comfortable that the bears have actually taken over. For the time being, once again, bullish outlook as long as the price action remains above the upward trend line, which is also accompanied by an RSI indicator, which is quite high. It's actually at 66.2, while the price action, on the other hand, seems to be flirting with the upper Bollinger Band, which may slow down the bulls a little bit. Let's move now to USD/JPY. Now, USD/JPY may have been the main market mover among majors, and it had the widest reaction against the US dollar. I would be highlighting, though, the strong bearish tendencies of USD/JPY during today's European session. And I have to tell you guys that we had some fundamental news, but before we get into that, let's make the necessary corrections on the pair's resistance support lines. Definitely the 137.50 is going to be turned into a resistance line, as is also the 135.80, given that the price action has moved decisively lower. And actually, it has even tested the 135.80 as a support line, and actually tested, aimed for it, and it was not threatened. So I'm thinking that the validity of it as a resistance line is now even greater. Let's drill for new support lines, unlocking the chart, moving back. Okay, we have one peak here. In green, that would be the 131.80. Yep. And we have another true here, but I would like to go a little bit further back. Okay, I'm going to be choosing this one. I'm choosing it because exactly there was an upward movement, and when that was about to correct, this level held its ground and actually forced the price action to go upwards. So that would be the 129.50 in green. Sorry about that. Okay, let's readjust, correct the labels. Making a start with the R3, which is now being placed at 139.65. Sorry. Second resistance line at 137.50. First resistance line at 135.80. First support line at 133.90. First Second support line at 131.80. And the final support line being placed at 129.50. So for the time being, we tend to maintain a bearish outlook. And by the way, we had some fundamental news which tended to affect JPY more on the bullish side, strengthen the JPY side of the pair. And those were just minutes ago. I was just looking at Bloomberg Terminal that practically there were breaking news that there are rumors that BOJ may be revising its monetary policy settings next year. Analysts were quick to speculate that such a revision would include more hawkish elements, which may imply practically that the possibility of a rate hike draws nearer, or even at least that the yield curve control may be raised. Say, for example, the target for Japanese government bond yields to be raised from the current 0.25%, which is very low. Let's drill down to the minute chart and see the market reaction on this one. You can see it practically here. It was a beautiful market reaction, intensifying the drop of USD JPY as it strengthens practically the JPY side, and it was of around 71 pips. So that was quite interesting. And despite the correction higher later on, you can see that the price action remained bearish and continued to drop lower. And may I add, even at a faster pace than other major pairs which we have seen up until now. That would be Euro USD or GBP USD. Back to the 4-hour chart. So we tend to maintain our bearish outlook for the pair, and that resides practically on two elements. The first element is that the fact that the price action had a steep drop, escaping practically the sideways motion boundaries it had in the past. I would also note that the RSI indicator is pretty low. It's actually right now at 32.3, pretty close to a reading of 30. I would note though that the price action's drop has reached the lower Bollinger Band, which may slow down the bears a little bit. But I think the bearish outlook is still in there. And we have also diverging fundamentals here, where we have on the one hand news weakening the US dollar, like the slowdown and the increased expectations of the market for an easing of the Fed's rate hike path. On the flip side, JPY seems to be strengthening as there are news that BOJ may review its monetary policy settings, most probably to the hawkish side. Once again, though, the main issue for the pair is going to be today the release of the Fed's interest rate decision. So I would be holding my breath here to see how that's going to be affecting the pair's direction. Should the Fed actually ease its rate hiking path and at the same time show that it's more leaning towards the dovish side, that could weaken USD JPY even further, causing it to drop, breaking the 133.90, probably testing, if not even breaching, the 131.80. On the other hand, should the Fed slow down the rate hiking path, but the dot plot shows that it's going to be raising the final rate higher than the dot plot showed in September, probably even maybe reaching or approaching 6%. We may see the US dollar strengthening. However, that will also be highly dependent on the tone of the accompanying statement, how long Fed policymakers expect to see high rates remaining at very high levels for a prolonged period of time, and whether Fed Chairman Jerome Powell in his press conference is going to be sounding hawkish or dovish. Now, should the hawks have it, we may see the pair reversing direction, breaking the 135.80, possibly definitely reaching, maybe even breaching the 137.50, thus paving the way for the 139.65. That would take the markets by surprise, and we may see an asymmetrical move higher for the US dollar rather than the drop it may get should the Fed sound more dovish than expected. Let's have a look now at gold's price. Gold's price, which jumped, breaking above the 1807 resistance line, a level which now is being used as a support line. So let's change that into green. And let's go hunting for a new resistance, ultimate resistance level. We have a nice peak here. In red, and that would be the 1910 resistance line. Could be a little bit higher though, given this peak here. Let's have a look. Also find some support levels here. So this level was tested to the upside as well as to the downside extensively, mostly to the downside, but also to the upside. So I think it's more valid than this one. Yeah, you can see that in the past it was clearly broken a couple of times. I'm choosing this one. Okay. And that's, the 1920. Resistance line. Here we go. Locking this in, readjusting. Let's change the labels as well. Making a start with this S3, which is now being placed at 1735. The S2 at 1766. The S1 at 1807. It's nice how the the precious metal was able to break clearly above the 1800 psychological barrier. The R1 at 1840. The R2 at 1875. And the R3 at 1920. For the time being, we tend to expect the precious metal to stabilize somewhat, yet we note that there may be some further correction lower. For the time being, the 1807 seems to be holding though. Should the bulls take over, say in case we see the US dollar weakening once again, we may see the price action of gold rising, reaching, if not breaching, the 1840 resistance line, in which case we may see the price action paving the way for the 1875 resistance level. On the flip side, should the US dollar strengthen, we may see the price action definitely dropping below the 1807, reaching, if not even breaching, the 1766 and start aiming for 1735. Let's have a look also at your stock markets. quick look at the Dow Jones. Dow Jones, which rallied actually, paired the gains it had made during the release of the US CPI rates for November, and corrected lower later on, pairing practically the gains with losses and landing at the levels it was before the release. The 34,275, despite being broken, we can see here that during the European session today, held its ground as a resistance line, so it's still valid as the R1. I'm keeping that. And overall, though, I would like to see the Fed's interest rate decision affecting the index. Should the Fed actually sound dovish enough, we may see the price action rising, breaking the 34,275, and aim, if not breach, the 35,500. On the flip side, should the bears take over, in case that the Fed sounds actually hawkish, and maybe even more hawkish than what the market may be expecting, then we may see the price action dropping and Dow Jones breaking the 33,470. For a bearish outlook, I would definitely require this. I would require a low true than this once. And I wouldn't be surprised to see the price action aiming, if not even breaching, the 32,670. It's a huge drop, I know it, but in case we have a hawkish Fed, I think it's quite possible. And we can see that in this rise here, only in the reverse. Okay, as promised, we went through some major currency pairs. We went through gold, we went through US stock market indexes. More or less, that should give you a hint about what's on a technical level ahead of the Fed's interest rate decision. From all of us here at IronFX, best wishes for solid trading.
Session today, we want to continue with trading insights about silver and look at what affects the price of the precious metal. Silver prices are not easily influenced or affected by political or economic events. This is because it is viewed as having an inherent value, meaning that its value is protected against times of financial stress or political instability. When compared with gold, the price of silver tends to be much more volatile, while a much higher proportion is used in industry than the yellow metal. The price of silver is dependent on supply and demand. In terms of supply, silver has the largest volume compared with other precious metals. Meanwhile, the mining of silver has substantially increased over the past few years and is often a co-product of either mined minerals, such as gold and copper. Due to its wide use in industrial fabrication in products such as conductors, switches and fuses, silver prices can be affected by industrial output levels in terms of production volume. The price of silver tends to follow the price of gold. Although this is not set rule or formula, there is some evidence that a price correlation exists between the two precious metals. As the world's leading currency, the US dollar has an impact on the price of silver. The price direction of the dollar has an inverse effect on silver, meaning that the precious metal can be an appealing investment when the dollar is low. Thank you for watching. This third part completes our series on trading silver. Stay tuned for more exciting educational videos.
I can close this. It's on YouTube anyway. Show them how to get to different places, the password and stuff.
Got it.
Sorry.
Hi guys. Hi guys. Can you guys hear and see me clearly? Sorry, I have a ulcer on my tongue, so I have to speak really slowly through the webinar today. So please bear with me. Right. Hi Rahim. Hi David. Hi John. Okay, for today's session, let us give the rest of the attendees a couple more minutes before I start. Right. Let me know where you're tuning in from. Okay, I'm tuning in from, I'm speaking from Singapore, and it's 6:01 p.m. on a Wednesday. Just give the rest one more minute before I start the session. So in today's webinar with IronFX, we're going to talk about correlation between different asset class as well as between different currency pairs, how the positive or negative correlation between currency pairs can help you identify your support resistance, can help you identify your trade positions, how to enter a position or when to exit, right? Hi Adeshina from Nigeria. Hi, good to see you. Thank you guys for tuning in early today. Hi April. Okay, so like I've mentioned, we're going to talk about correlation between different currency pairs as well as across assets to improve your trading strategy, right? So let me know in the chat group or the chat box because I can see it. I have it open on another screen so I can see all the questions or any requests that you have for me, right? Just ask away if you have any questions. So just maybe a few more minutes before I start. Can you guys see me? My typings. In case I need to copy and paste some of the important links. Wait, let me see. Because previously when this happened, yeah, everyone, some of the attendees mentioned that they can't see or can't type. So okay, this is great. So like I've mentioned, I have an ulcer, so bear with me if I speak slowly because it's right on the right side of my tongue. So if you can't fully catch me, also let me know. I'll try my best to speak as normally as possible and as slowly as possible. Okay, so before I start the session, let me check whether I'm sharing the correct screen. You can see my screen right here. Okay, let me just share with you guys a couple of important, bring you guys to a couple of important pages. So this is IronFX page. If you guys have missed the first part of the session, or you guys want to take a look at our previous webinars, right? Just come to this page here. Let me cut and paste to the chat group. Okay, you can see, right? You can see all our different you can see and register for the upcoming sessions that we are going to have. But wait, give me a second. This is not the page actually. Should be best for me. Me 1 second. Aha, here, past webinar, sorry. So this is the link. Past webinar should be here. For the previous link that I sent is for registration of upcoming webinars, and this will be for previous webinar as well as today's session that will be recorded and posted probably by end of the week. So if you guys have missed out on any parts and you want to have a refresher course or you want to rewatch the session, you can click on the link, come to this page here, click on English, and this will be the past sessions that we actually have. There are a lot of live trading sessions, support and resistance, some of the educational ones as well. So feel free to come and check it out. Okay. And then I will bring you guys to the second important page, which is our, okay, maybe I should do it here so you can see. So you can click on our VIP room here. Right. So this is a special partnership with Everest Fortune Group with IronFX, where we have this VIP trading room. So if you guys already have an account with IronFX, you can access the VIP portal depending on how much deposit you have with them. So for example, for this portal itself, you can get exclusive market forecasts where you trade and learn with our institutional and interactive grade market forecast. So most of the time, the analysts, the prop traders, as well as Desmond himself will come to the portal to create market forecasts where you can see. If you have any questions, we have an interactive chat for you to ask away. So later I'll show you guys how it works. You can actually ask any of our traders about how they think of your entry or where you should place your stop loss or take profit, etc. Right? So it's a one-on-one personal interactive chat. And you can also request for market forecast as well. So you could say things like, hey, Desmond, what do you think about USD JPY in the upcoming 2 days or upcoming 4 hours, right? So how you can access to our premium service is that we have 5 tailored account types, depending on the deposit, or as well, depending on the deposit or depending on what you need from the website, is from the portal itself. So if you get the platinum, you can get priority support as well as a weekly private 30-minute group call where you can discuss and analyze any of the trades. So just click on the VIP room. I'll paste the link right here. Okay, so this is our VIP portal. I'll just do a quick run through. Okay. So this is how the page look like depending on which tier you are in. So this is how the portal actually looks like. We have a chit chat section where you can come here and then you can chat with any of our traders or any of our analysts about what you think of a potential setup or what they think of a specific currency pairs. And then there's the potential setup. So once in a while, we'll come to this page and then we'll be talking about what trades we'll be looking at or what trades we are taking. Okay. Then there's the news section. Every day there will be a news update that will be posted here. The important news, the market news, the announcements. And then there's the major pairs. Analysts and prop traders will come here and then they'll talk about, you know, hey, so today I posted something about the DXY. You know, when you hover about the red highlighted words, you can see exactly what I'm talking about. So it won't be so confusing for our clients, right? So the same to you, if you have any questions about any currency pairs, just click on the pairs. So we have majors, commodities, indices, crypto, all the crosses as well as yeah, whatever you want, all the currency pairs. If you don't see it here, let us know. You can request for it. So you can come here and say, hi, Annabelle, I want to know if price might break this support, for example. So you can highlight the support level. You can actually draw it here, and I will know. Okay, enter. So I will know exactly what you're talking about. Okay. Hi, Rahim. Okay. Anyway, okay, so this is how the portal looks like. You can check it out. I have pasted the link on the chat, in the chat. Okay, so let us start the session today. So today's webinar series, we are going to talk about using correlation to improve your trading. So out of the attendees, does any one of you use correlation at all when you trade? For example, maybe if you are looking at USD pairs, you might look at DXY or the dollar index. Let me know in the comment section if you guys use any correlation currency pairs or across asset class to improve or to redefine your trade positions. I have a couple of answers. Some yes. Haven't done so or thought of it. Okay. This might be a good introduction for those who have not used it before. It will be a relatively simple and understandable webinar series because for some who haven't learned or who haven't thought of it, this would be a good place to start. And then, okay, so let's dive in. So before I start, disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So before you start trading, please do your own due diligence. So this is me, I'll be today's host. I'm Annabelle. So I'm an analyst for Everest Fortune Group, which is the award-winning research firm. Finalist for Best FX Research 1920 and 21. Finalist for Best Equity Research 2020 and 2021. So the agenda for today, let me grab my pen. So agenda for today, we are talking about correlation between different currency pairs and maybe different asset class as well. So we're going to have a brief understanding of what is correlation, understanding positive and negative correlation, strong versus weak, correlation across multiple time frames because there are you have a daily chart, you have a H4, H1, and then you have your 30 minutes, 15 minutes, 1 minute, 30 seconds, okay, etc. So correlation across multiple time frames might differ because of the different time frames, okay? Using correlation to identify support and resistance as well as breakout. Then I will move on to live charts. Sorry, my horrendous handwriting. Okay, but anyway, so what is correlation in layman term? Can anyone of you let me know? What do you guys understand about correlation? Is there only positive correlation, negative? Is there a neutral? What's the understanding of correlation in your knowledge? Okay, it's relationship between the currency pairs, yes. I do not understand. Okay, no worries. So what exactly is correlation? Correlation measures the relationship between two currency pairs. Okay, for example, to put it simply, correlation is like a relationship. So for example, when there's COVID, what do you think is the correlation between COVID and let me find a good one, and pharmaceuticals and pharma stocks. Is it a good correlation, meaning COVID cases rise, pharma stock also rise, right? Because pharma stocks, pharmacies, pharma companies, they have to produce more test kits. They have to produce more medication. They have to produce more manpower as well, right? So in general, pharma stocks shoot up because the government has to pump in more money as well. So the relationship, the correlation between COVID and pharma stock is positive because both of them go up together in sync. Okay, that is a positive correlation. And a negative correlation means COVID versus maybe the amount of ice cream you eat, right? So it doesn't matter whether I have COVID or not. It doesn't make a difference to the ice cream I eat. So it's a negative correlation. Means COVID cases go up, it doesn't mean that my ice cream might go up. Okay, maybe this is a neutral. Okay, I would say that this is a neutral. In this case, neutral. Maybe COVID and let me think. Negative correlation. Okay. For example, tourism. This is definitely a negative correlation because during COVID, during the pandemic, nobody is allowed to travel, right? So when your COVID cases go up, definitely your tourism will come down. So this is a negative correlation. So we have positive, we have the non-biased, which is on the neutral ground. We have a negative correlation. Okay, hi Wanjuhi. Bear with me because I have an ulcer, so I might speak a little slower. Okay, so there's 3 types of correlation, which is the positive, the negative, as well as the neutral. Right? It's quite easily understandable. So between currency pairs, let me erase all my. Okay, so in FX itself, some currency actually move in tandem, meaning together. So one will go up, the other one will follow very closely, or maybe one go up this way, one will follow quite closely. So there are 2 types. One is very strong, and then one is just maybe not as strong, but still positive. Okay, so same goes to the negative. There's a very strong negative correlation, which is they move in tandem. And there is some that is, oh, sorry. Very strong means directly opposite. Okay, ignore this. This is wrong. So very strong means very opposite. And then some that are maybe not so strong. Okay, but still negative correlation. So there are different types. I hope my COVID example was very clear. Later on, I'll give you some example and I'll show it in the live charts how some currency pairs are correlated or not correlated. So different types of correlation. So can you guys name me some of the pairs? Let me get my pen. Okay, maybe we start positive. So can you guys name me some of the different types of or if you guys know of any positive or negative correlated currency pairs? Okay, most of you said that. Nope. Oh, okay. XAU USD, yes, correct. Yeah, they are negatively correlated, correct. Okay, so the different types of correlation are some are within FX pairs. For example, your GBP, USD, GBP, JPY. Maybe I can show you. Okay, so for example, I already pulled the charts up. So this is my GBP versus my GBP, JPY. So they are positively correlated because, as you can see from the charts, they move in tandem, meaning to say when my prices come down, it will come down. When my prices shoot up, it will go up. So this is somewhat positive because you can see there are some instances. Okay, this one is one instance that I highlight where my GJ actually spiked down, but my GU actually moved up. So when there is a correlation, it doesn't mean that it always have to move exactly the same. And the reason why there is a difference in, okay, see, this is 2nd of August, right? The reason why, so the reason why there is a difference in, let me close this. There's a difference or a spike up or spike down or suddenly negatively correlated is usually by external forces and important announcements, etc., like your Fed rate hikes, your government cutting rates, etc. So it has to be a very major news for them to be so negatively correlated in a positively correlated relationship. Okay, so for this case, on the 2nd of August, you can see that JPY actually dropped because of the Fed official hinting that more rate hikes are coming. Okay, so there must be a major news that causes this. I actually Googled it, but I can't find it here. But yeah, it's because of big news like this. Yeah, dollar jump versus yen as Fed officials hint more rate. So yen actually dropped right here. Okay, so same goes to this. If you actually see a sudden movement up, but there is no movement in the other correlated pair, it must have meant something. Okay, there might be a major news, there might be big announcements, or something along the line. Okay, let me go back to my slides. Okay, so it can be within your FX pairs, the correlation, it be negative or positive. It can be across FX pairs, meaning it can be your AUD USD versus your AUD CAD. So across FX pairs or within FX pairs. And then it can also be across asset class, meaning it can be maybe an FX versus a commodity, for example. Maybe your XAU versus your DXY or USD or JPY, something like this. Okay, because actually gold is quite a common currency, common commodity that is often compared with other FX pairs. Okay, it can be within indices as well, meaning to say you can compare S&P versus your Asia or your Hang Seng index or your SPX. Okay, so it can be within indices as well, or it can be within sectors like your bank index versus banks. Okay, so there are many different types of correlation that we can look at. Even your even in crypto, for example, you can compare. In the past, Dogecoin, right, used to be very popular, and it's always correlated to this guy called Elon Musk and his tweets, right? So there's often correlation between a lot of things. It's just how we identify them and how we use them. to our advantage. Okay. Okay, so for example, here we have our GBP, JPY. Okay, actually it's here. Okay, here might be easier. GU versus my GJ. So you can see that they are they positive or negatively correlated? Let me know in the comment section. Okay, I see a lot of positive, correct? Okay, so these two currency pairs are positively correlated because they move in tandem, meaning to say when my prices come down, when my blue prices come down, my orange prices come down. When it moves up, they move together. Okay, so it's not identical, but they move in the same structure or in the same direction, unless there are major news that might change. Because the base currency is the same, right? There must be some form of similarity between them. So ultimately, you are just comparing USD and JPY. Okay, so unless there are major news in your USD or JPY, then most of the time it should move in tandem. Okay, so positively correlated because prices move in the same direction. Then we have our AUD USD versus our USD CAD. So from here, you can see that one price goes down, the other price goes up. So this is a negatively correlated currency pair. Okay, also because one is your front pair, one is your back. Okay, so you can see one price actually comes down, the other goes up. So they move in the opposite direction. When this price comes down, this price goes up. Okay, it's very easily understandable. Okay, so this chart, you can see that AUD USD versus your USD CAD, they are negatively correlated. Then we have our SPX versus our Euro USD, which is often compared, right? So not only do we compare our FX pairs only, you can compare indices FX, you can compare commodities FX. So like I've mentioned, XAU, which is gold. So gold is a very common commodity that is compared to other FX pairs, right? So in this instance, you can see that my prices are going up. Okay, it's not so super correlated, but you can see that they react the same way to the market, right? So this is probably maybe a 0.6 to 0.7 correlation. It's not very, very correlated. So, I forgot to mention as well. For correlation, there is -1, meaning not correlated at all. 0, 2, +1, meaning very correlated. So +1 is the maximum. -1 means not correlated at all. So in this case, you could give it maybe a 0.7, okay, because it's not very correlated. They're still very, the spaces are still quite huge. But if I'm going to compare this I would say is a 0.9 to 1 because our prices are very closely knitted, right? As you can see here. Okay, let's take a look at our gold, okay, versus our SPX. You also can compare indices versus your commodities. So orange being XAU, prices are moving in the opposite direction. As you can see, my prices are coming down, but prices of my SPX is going upward. So it reflects negative correlation. So this is probably a -1, right? because you can see it exactly moves in the opposite direction. Okay, so how do we actually use correlation to identify support and resistance? Does anyone know or have tried it before? Happy lips. Okay, I guess most of you haven't tried using correlation to identify support and resistance. Okay. So this is our AUD USD versus our GBP USD, right? So you can see if I put them together, they might be quite correlated, but not so, as you can see that. Wait, let me draw clearer. You can see this here. Right, the prices is like this, but my prices here goes up all the way, and then it comes here, tests a few times, comes up again. So it's not exactly very much similar if I were to put it overlapping each other, right? So I would say this is a 0.7 correlation, not exactly very strong, but it's still correlated. So you can still find you can still fine tune your position by finding the support and resistance of these two pairs, meaning to say, if they're actually still correlated, you can still find the same support as well as the same resistance in the chart. Okay, so for example, in my AUD USD 1-day chart, I clearly can see that this is my support, right? So this is clearly my support line here. So at this point in time, probably okay, it should be the same date. I can also find my support here. So these two, the dates here versus here should be somewhat similar, or sometimes it might vary by maybe a few candles. But in general, if they are positively correlated, you can find the same support and resistance. So for example, when we are sending our analysis or our research papers to institutions or other corporates, we will let them know that, hey, AUD USD is at a current support of which number, and then it should be similar to GBP USD at the support of what number, of 1.3688, and as well as the resistance. So we'll let them know, hey, AUD USD is at the support of blah 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 XXX. Same goes to your support area of GBP USD at XXX, and then it should be the same as maybe your NZD USD. So what we are trying to say is that for positively correlated currency pairs, usually when they're at the support, the other currency pairs should also be at their support level. Okay, this will later on help you to identify your breakout levels. Okay, I will show you guys later on. So when it comes to this correlated pairs, we'll show you exactly where the support is. So when the support is here, it should be at this level. When it's a resistance here, it also should be at its resistance level here, right? So when prices come to test once, twice, this time, the third time, you must be thinking, hey, should I be playing a reversal or should I be playing a breakout? You can actually come to a correlated chart or correlated currency pair to check it out. So 1, 2, 3. And then same thing, you see. So both of them are at a level where they are undecided whether should the prices be going up or should the prices be in a reversal. So you know that the market hasn't decided yet. But if let's say on my AUD USD, my price actually came up to here, right? on this candle here, and maybe one more. Okay, so if my prices are on an upward momentum, but my GBP USD is still here, you know for sure that, hey, my prices might actually fly up the same as AUD USD. So this could be used as an indicator, as one of the indicator, not as the only indicator. So for example, if you have all your levels, all your trend lines, all your channels all in place, all you need is one more push or one more factor to actually help you make that trade more more profitable, right? Or make that trade more accurate. So in this sense, if you have all your flip levels, all your channels, maybe your Ichimoku, all your indicators are all in sync, right? So you just need that one more comparison between a correlated chart to tell you that, hey, actually I'm in a bullish momentum right now. Maybe I should buy at this price here. So this is how we use correlation to redefine or refine our trades, our trade positions. Okay. So using correlation to identify breakouts. So like I've mentioned in this chart, it will be the same. For example, XAU versus US dollar, you can see that they are very negatively correlated. So for negative correlation, always remember it will be a crocodile mouth when it's open. So it's always in the opposite direction. But if it's positive, it's always parallel. Okay. It's always the same direction. So in this chart, you can see that let me just grab a sip of water. My ulcer is very painful. So for example, you can see here that my prices have touched once, twice, 3 times. Here, at this level here, I'll be thinking, hey, should I be playing a breakout or should I actually wait for a reversal, right? So if you compare to your US dollar, which is negatively correlated, at this point in time, I can see that, hey, my prices are coming down. My prices actually plunged. So if it's negatively correlated, then I'll be thinking, okay, I have a confirmation that bullish momentum is for my goal, right? Let me repeat myself. So at this point in time, ignore this area. So let's say we are right here on this red line and prices of my goal actually spiked up, right? Okay, there's a breakout, but could it be a fake breakout, right? Because I wouldn't be able to see all this yet. Then I will wait for my confirmation on my USD. I will seek for reference. So for example, at this level here, it will be the same. All right. It will be the same here for this to be broken, for this level to be broken. So we are both at the same point waiting for prices to be broken. So once I have a upward confirmation of bullish momentum, I'll probably wait for my second candle for confirmation. This should be an downward trend. This should be an upward trend before I take any trade, because you wouldn't want to enter a trade on a false breakout, correct, on the first candle as well. So I'll wait. Okay, so there is a confirmation that my USD is dropping. So I would enter my gold maybe at this level here. At this level here. Or I could enter my, okay, this USD. So other USD pairs maybe at this level here for a downward bearish momentum. So this is what we meant by that's what we meant by using correlation to identify our breakouts. Okay. So when there's a breakout of the currency or that pair, you seek for confirmation or reference from another correlated or negatively correlated currency pairs to give you the extra confirmation before you enter a trade, right? Okay. Okay, now let us move to my live charts. I will show you what is negative or positive correlated. Okay, let's start with, okay, so this is my AUD USD versus my, I don't want this, sorry. NZD, let me add. Okay, for this, as you can see, this is my AUD USD versus my NZD USD. So you can see that, let me try candles, see whether it's nicer. I think lines are clearer. Okay, so these two charts, as you can see here, they are very, very positively correlated because the prices are moving exactly the same steps, as you can see, right? So this is one of the currency pairs that move exactly the same. So it's very, very strongly correlated. And I will give you a tip today. I'll give you guys a tip. I'll leave you guys with a tip today. If you guys want to know whether a currency pair versus commodity indices or another currency pair is correlated, just go to my FX book, correlation, select this, and this will be the page where you can find all your different currency pairs. This is like a cheat sheet that we found. So obviously there are so many currency pairs, right? You can't possibly remember who is correlated to what, unless it's major pairs like your DXY, your gold, your Aussie dollar, your Aussie, your Kiwi. These are the major pairs that you can remember off of the finger of your tip, of the tip of your fingers or of your head. But if you're looking at all the currency pairs or maybe exotic pairs, or if it's a new currency pairs that you're recently exploring, you do not know whether they are correlated, you can come to this page here, select the time frame that you usually trade with, because for different time frames, it works differently. It might work in a one day, but it might not work if you zoom into a 30 minutes. Okay, so it's depending on which currency pairs and what time frame you actually are trading in. So usually we go higher time frame for hours. Find currencies with correlation higher than, for example, you want very correlated, so they will highlight for you. See, 96. Okay, let's take a look. 100%. This is interesting. Oh, okay, because it's the same pair. Okay, so you can come here, you can take a look. It's a very interesting site. If I'm not wrong, if you click in, they'll tell you which are top positive correlation and then top negative correlation. So you just have to focus here. Okay, so this is a cheat sheet that I will leave you guys with to explore, right? Come to my FX book and check it out. So for this pair, I'll just give you a couple examples before we end the session today about correlation. So for my AUD versus my NZD, we can see that they are very, very correlated in the sense that they move in tandem and exactly the same. Okay, so what we can do here is, for example, should I remove one? Okay, maybe I remove. Give me 1 second. So for example, in this manner, okay, I'm looking for at this level here. We do not know whether there is a triple top or we are still looking at maybe price breaking the Ishimoku or breakout at this level to go on a bullish momentum, right? Since it has been on a decline for many weeks. But we do know that, you know, prices are on a downward trend, just that it broke out here. Okay, just let us place this here. Then let me add my NZD. Okay, so for this chart example, can see that price actually move very similarly. But what we can do is, for example, you look at this area here, price actually did spike up a little bit, right? But you also realize that this is a fake breakout. If honestly you were to trade according, do not trade, what was I going to say? So at this point in time, we'll be thinking whether prices are gonna break out of this triple top, right, for both the currency pairs. So how you actually utilize positively correlated currency pairs is that we wait for confirmation from the other pair. For example, maybe prices will react faster at this area and it might come down first. Then we have a confirmation that, hey, you know, it's still a bearish momentum instead of this fake breakout, right? Because of it broke out of my descending trend and it might be going up. So this is what I thought here originally. But when I come to my NZD currency pair to reference, I don't see that, you know, prices are actually moving in a positive or in a bullish momentum. So I will wait for confirmation in any of the pair, depending on which pair you are buying or selling. Okay. Okay, let me give you guys another example. We use a negatively correlated pair then. Oops. Okay, so this is my USD Swiss franc. This is my NZD USD. You can see that they are negatively correlated, right? So same thing. My prices are at a triple top, for example. And then I can see that, hey, you know, my prices actually at this level, I'll be thinking, hey, is my price gonna break out, or is my price gonna form a triple top and come back downward, right? And we can see that right here. Where's my okay? So at this point, okay, we're thinking whether it will break out, but prices actually move downward. So I'm expecting a slightly upward momentum, right? Same thing, right? But then it came down. So this is a fake breakout and then it came back down. So I'm expecting this price to actually go back up. Correct? Because at this level here, at this point here, my candle actually come down here. So if it's negatively correlated, I'm expecting price to actually go up here, which it did, but it was a fake breakout. So it came back down. Now I'm expecting price to slightly go up, right? Because it clearly failed to break this level or key resistance level here. So you can actually try to throw in other levels. For example, maybe your 23.6 Fibonacci levels, right? Your 23.6 Fib retracement levels. You can actually throw in to see whether there are any other important indicators as well. So it's not just purely using correlation to actually trade, but it acts as a indicator for you to redefine or to make your trade more accurate. Okay. So I hope that I'm clear in explaining today's session. I've seen that some of you has just joined the session. but we have come to the end of the session because we have other webinars to host. If you missed today's session, this session is recorded. You can actually go to the website, IronFX. Let me just paste again. Yeah. All these sessions are recorded. You can go to webinars. Actually, it's here. Past webinars. Here. Let me cut and paste again. For those who have missed the past 50 minutes of the session, I have come to the end already. Okay, this will be the page. If you want to view today's session, click on English, and then there will be all the past webinars that we have recorded, and it should be here. So for today's session, if you missed it, it should be uploaded by end of this week or maybe latest by next week, early next week. Okay, so today's session, we are talking about correlation to help you identify or as an indicator to add on to your other indicators for a more accurate or more defined trade entry or exit. Okay, so I hope today's session is useful and understandable. Sorry if I speak too slowly because I have an ulcer. Thank you guys for tuning in. I will see you guys next week. Bye.
Everyone, my name is Emily and welcome to another educational video. As part of our technical analysis series, we would like to look at the technical indicator called moving average. A moving average displays the average of data points across a predetermined number of time periods, typically price data. Because each data point is computed using information from X number of prior time periods, it is referred to as a moving average. Moving averages smooth the price data to create a trend tracking indicator by averaging previous data. Although they lag since they are dependent on historical values, they determine the current direction of the price rather than predicting it. Moving averages help smooth out fluctuations in market prices, filtering out the noise and making it easier to establish underlying trends. They also serve to alert traders to important changes in direction. Moving averages can be used to indicate potential support and resistance level, as well as the trend's direction. Additionally, they serve as the foundation for additional technical overlays and indicators, including Bollinger Bands, MACD, and the McClellan Oscillator. The most popular is the simple moving average. By calculating the average price of a security over a predetermined number of periods, a simple moving average is created. For a 5-day moving average, you simply add the closing prices of the last 5 closings and divide the sum by 5. You add each new closing and skip the oldest. A moving average is an average that moves as its name suggests. The average moves along the time scale as new data is added and old data is deleted. The method is the same whether you choose a 10-day average or a 40-week average. Rather than adding 5 days, you add 10 days or 40 weeks and divide the amount by 10 or 40 as appropriate. Thank you so much for watching us today, guys. See you soon.